Good morning, everyone. Welcome to the Big Tech Update Show every Sunday. I break down all the big tech stocks: Amazon, Tesla, NVDA, Microsoft, Google, Apple, and I do technical analysis for all these stocks, and as well as a support and resistance guide, and what I'm going to be seeing going forward, and where I'll be looking at for these price actions. All right, so let's get into it. Right now, we are looking at Amazon. So Amazon has broken out of this wedge that we've been looking at for the past couple months. And when we broke out of it last week, I was talking about saying when we back test it, it's exactly what the bulls want to see. So when we have a breakout, breaks above it, we want to see a back test of the prior resistance, which is this tail looking line, was prior resistance here. Um, and now it's becoming support because we're above it. So we back tested it twice here, and the bulls held it. So when that happens, it's a good sign for the bulls that we are likely to have a continuation of the prior move, which is this prior move. So we backtest it, and then we actually bounced support, made even higher. So this was the next level of key resistance around 116 area. You can see all this cluster of volume traded, and was acting as resistance and support from both sides, depending on if you're under it price or over it. Now we are over it, so it's going to act as support. And on Friday, we have back tested it, and so far it's held it. Now we don't know what's if it's going to end up holding or coming back into here or not until Monday. But if we do bounce off of this, which is similar to here, where we back tested it and hold it, then bounce off of it, then the next area I'm looking at is right here, the 120 zone. And you can see this. This is the top of the zone for all this areas about this traded, and this coincides with the bottom range of this area. So that is the next level I'm looking at for the bulls. If we can actually bounce off of this area, we can't. Then for the bears, and looking back into this chop zone where it will be coming back into down here, where likely the first area we'll test is likely this level right here. This level, this high will be coinciding with this low. So that will be roughly around 112 is what I'm looking at for bears if we do break back below this prior resistance becoming support. This one will be key for me. So bulls really want to see us hold this level. And bears want to see break, and we'll be back down here again. All right, that's all I got for you guys with Amazon. Let's get into Tesla. Tesla right now is still in trading in this wedge for the past many months, over half a year. So you can see here resistance, support, and it's more for a visual guide overall. But psychology of it, if it's a big move down, big move up, it's a tiny. It usually forms an equilibrium and tightens up. And we'll have to see which way it'll break. But as for now, we ended up filling this gap over here on Friday. So that's it for the bulls. But we are still under quite a bit of key resistance. You can see all this cluster of volume trade in this area has not been resolved because we're still under the price at the moment. Next level I'm looking at is right here, 186. You can see it was acting all resistance here. We're under it, but when we're above it, it was acting all as support. So we are currently under that price action, so it's going to act as a resistance. And if we do get above here and break above it, I'm looking back at the top of this wedge resistance, which coincide with this area as well. So if we do break above it, this one is 200 is the most key. It's also a psychological level. You can see we rejected from here, 200, around, we bounce off of here and try to trade around here in this area, rejected from here. So maybe 200 is going to be definitely the most key, but we're still quite a ways from it. We are 11% away from it. So yeah, it's still quite a bit, and we have to see if Tesla ends up holding the bottom of this range, which is 1 78 and 77 ish. That so what I want to see is if when we pull back to here, we want to hold 178, which is support right here, prior support, prior support, prior support, all this area, and then bounce off of here and try to test 186 range for the bulls. That would be the most ideal scenario for the bulls. Once you pick up off a resistance and when you back test it and bounce off of it, that's the ideal scenario, meaning there are buyers that want to get in that area. And for the bears, you definitely want to see us back below the 178 range. That'll be a red flag. We just broke above it and it came back right into it. That happens. Looking back down again here in 160s, 166 area. The 166 area would coincide this line pretty much exactly with the bottom support of this bottom wedge. That should hold, in my opinion, because I don't think, unless the market itself rolls over, and otherwise, if the market is going sideways or there's nothing crazy going on, it should hold this level and bounce off here. But if you're bear, that'll be your target. If you're a bull, this would be your first target, and then this would be your second target, and this is your third target. Let's move on to NVDA. NVIDIA has been the stock that never drops, and it's crazy. So we broke out of this rising the wedge that we've been looking over for many months, and you can see right when it broke out, you can see the increasing in bull volume, and we straight shot up into the next sell zone. So essentially, this 317 area coincides with this all-time high cluster area where we had back in December of 2021. You can see this is the volume profile, and all you need to know is this blue line is the value area high, which is will act as a resistance when you're under it. Meaning, the more volume that is traded in one area, the more likely that area will act as a strong resistance support. And hence, if you see like a water slide down, it's a good chance that you can have a V-shaped bounce because there's not a lot of volume trading here. For example, Joe Smith or Bob, bought it here, and there's just only a few of them. When it comes back up, there's only a few of them going to be selling, so it's a lot easier for it to go back up. But if you have a cluster of people all in that area and buying, then all of a sudden the stock goes like this, right? They'll all get stopped out, and they'll just have a back. People that didn't sell will likely want to sell and to break even. So this is the cluster that we're working with right now, and we're at the top of the value area high resistance at the moment, and we slightly pulled back from it on Thursday, and on Friday we have currently have one red day, but that's not that big of a deal at the moment because it's still a absolutely uptrend on every time frame. And what it would be a red flag for me is if we do pull back 100% of the Thursday's move, meaning another red candle closing below this Thursday's low. That'll be a red flag. It's a red flag for the bulls. But as of now, there is no red flag, and the daily uptrend continues. You can see we traded sideways here, and we broke out, squeezed the shorts, and then the uptrend continues. First thing I want to see from if you're a bear, you want to see a hourly downtrend before anything even starts. So you zoom into the hourly time frame, and currently we have we actually do have it. Let me see. Hourly downtrend. Sideways. Yeah, no, we still have it's not a downtrend yet because this one high didn't break above this one high. So this, I'll count this as one move. This is the bounce. So this candle is higher than this candle. That sets our daily lower high. So one move down, daily lower high now is set. So if the bears can actually break below Friday's low, that would be a hourly downtrend confirmed. As of now, it's still an hourly uptrend. Actually, this is until we break below this pivot low. What the bears want to see, what the bulls want to see, is just we back up and just continuation of its hourly uptrend. So we'll see if the tech bulls will stay in control, and when we start next week, or it will start to revert a little bit. Even if we give back the hourly downtrend, we're still very healthy on the daily chart. There's not a lot of red flags at the moment. Um, but that would just be initial sign for the bears. And let's get into Microsoft. So Microsoft, we are looking at um, its sell zone as well. So this cluster here was a consolidation phase. Once we broke out of that sideways, you can see all the bull volume coming in. So when there's contraction, once it breaks out of contraction, there's always an expansion. So this is what we're seeing right now. So that's a bull flag confirmed. So that's very strong chart, but now we are testing also this structure as well, that 2021 high structure. So a lot of the tech stocks are actually testing the lower range or the middle range of that 2021 December high, when QQQ was actually hitting all-time highs at that area. So you can see the low of this range where we bounce off of it here. Bounce off of here, act as support, and support is now acting as resistance. So we are right at that spot. If we do break above that spot, then I'm looking at this level and the value area low of this level, which is 327, and this one would be 323. Yeah, so we'll see if the bears want to see is we come back down and give back most of this move that we broke out from. So if we do come back and break down into most of that move, then also started to question, so what was all this cluster of contraction that made us break out, and then we just gave it all back? That would be a initial red flag for the bulls as well. So the same thing as NVDA, we want to see a hourly downtrend before anything even confirms. Right now, there's absolute zero red flags on Microsoft chart. Um, so if we do break below Friday's low, then that's an hourly downtrend confirmed. Due to the size of this move, is a potential chance that that could happen. So we'll have to see if that actually happens or not. Even if it does happen, like I said, Microsoft will still be very healthy on the daily, on the longer time frame. Still currently in a uptrend. So yeah, so we are sitting right at the key resistance for Google's. All right, let's get into Google. So Google, I am looking at similar situation, but Google is not as strong as Microsoft. So we're testing this side of the chart. This is the side of the chart that Microsoft is testing, but we are still in that lower range as well. You can see all this volume traded in this whole cluster is bottom range is right here. So you can see bounce off of support. You can see when we finally broke down from that area, how much follow through it is from the bears. That is a key area, and we just rejected from it on Friday. You can see we have a upper wick here once we tested it and we came back into it. It doesn't make sense because look at the size of the move. We have been going 20% on a mega tech stock is quite a large move if you ask anyone. So a pullback like this is not a big deal at all for the bulls, and we definitely need to see a consolidation. Say we broke below, even if we bounce, come back all the way down here. I think that's the most likely scenario for me. We'll likely come back close to, or he touches here, and then we bounce off of that. Even if we wanted to continue to try to break this high or retest this high, we still need a little bit of a pullback for a daily consolidation, and then move up higher if that is the case. And for the bears, if we do pull back to this level, the key for me is the size of the bounce. So, because if this pullback gives us enough room for the bears to attempt a lower high, so meaning when it bounces, if it starts to shape up a lower high, meaning this lower high is lower than this high, and then there's a good chance that the bears can confirm a daily downtrend by breaking the prior pivot. So the size of the bounce will determine if the bears can have a chance of changing the trend. So that's the bear case. For the bull case, the size of this pullback will determine if we're able to try to retest this high again. So if it's a shallow pullback, then it's exactly what the bull wants, and then we continue higher. So large pullback, then the next time it bounced, there's a chance that bears could take over. So the size of this pullback is going to be key for me going into next week to see if the bulls will have a good chance to retest this level, or the bears might get a chance to set a daily downtrend. All right, that is what I got for you guys on Google, and I'm going to go to Apple. So Apple is an interesting day. When I was talking about this last week, where we gap up from earnings, and that was it. The next day, 10 minutes, first 10 minutes was all bull, and it went straight sideways for the rest of the next 2 weeks. It finally broke out of the sideways range over here when the market starts to went straight up QQQ. It was still a lot weaker versus QQQ, and you can see even on on Thursday, QQQ was up huge. Apple was only up 1.37%. It wasn't even participating during the end of the day. Let me leave the drawing real quick. So during the end of the day on Thursday, when QQQ was up, roughly how much is QQQ up? Let's see. QQQ was up 1.86%, and you can see Apple was not participating at all in the morning. You see, it came back up, and we gave it all back until the end of the day. Apple participated, which was interesting, and then it moved less than QQQ. So it's been weaker than QQQ overall, and so we want to see if Apple can actually put it back up, or it will just a move that followed the market, and now it's going to be weaker again. So we rejected from the top of this price right here. So on August summer, this is the high, and we hit exactly right at that spot, and then came back down to it. What I want to see from the bulls is obviously continue to hold this teal looking line, this 12 EMA. So we've been bouncing off of it pretty much every time. And if we get back under it, it's only like a 1 day thing, and the next day we're up on it again. So continue to hold that, as well as this pullback cannot retrace more than 50%. Otherwise, if we retrace over 50% of that pullback, we are back into this range, then that would be a very bad look. And that's a potential daily head and shoulders for me. Daily head and shoulders, it's a bearish pattern, meaning this is the left shoulder, this is the right, this is the head. And if we do pull back enough, then we have potential of shaping up a right shoulder that can confirm a bearish pattern if this breaks the neckline, which is this is the neckline right here. Then if it breaks there, it's a confirmed daily head and shoulders pattern. So that's potentially likely shaking up due to size of this breakout. It's not a lot. You can see we have consolidated for 2 weeks, and we only got 1.5% to the top. But now we already pulled back half of that, so we are up 1% for a 2 week consolidation, meaning bulls are tired. If we got a 2 week consolidation contraction, and then we break out of that, and all we got was a 0.9% move, and then we can't give back half of that, then clearly you can see exhaustion from the bulls around this area. That's usually what the price action is telling us right now. And so if we do get another 1% down, we're back in this range, and that is a red flag that can potentially shape up that head and shoulders I'm talking about. And so you can see this is compared to every other text chart like Microsoft. You can see it's a lot weaker in this area. But overall, it's still a good chart due to the size of, you can say because Apple's been running a lot more already compared to other tech stocks. It needs a break. And So bulls are tired at the end, right?